Good morning, everyone, and welcome to our webinar. Again, this is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website, which does mean that all attendees will be muted so that we can get a quality recording. If you do have any questions throughout the webinar, go ahead and type them into the chat box. We'll try to address these during the presentation. However, if we are unable to get to all the questions, we will have a member of our team give you a call later to follow up with an answer. Our next upcoming webinar is next Wednesday, the 8th of February at 9 a.m. Pacific. It will be with our Senior Internal Wholesaler, Mike Anderson, and the Mutual of Omaha LTC Director, Deborah Grove, for a look at the carrier's evolving claims department and how the claims process works. So with that, I will go ahead and hand this over to Don so that we can get started. Go ahead and take it away, Don.
Thank you, Courtney. Good morning, everyone. Don Erickson here with American Independent Marketing. Today we have a special guest, Nate Self from GILICO. Nate will actually be going over the hybrid product for long-term care and also the annuity portfolio with GILICO. These have been great products for us, and this is going to be a good presentation that we'll definitely think you'll enjoy. Nate, welcome. How are you this morning?
I'm doing well, Don. Thank you for asking, and thank you to everyone at AIM and everyone on the call for having me this morning. It's been an honor to get to know you and the rest of the team, and I'm really excited about what we're about to share today. We have a couple of products here that I'll be highlighting, but our flagship that I think everyone will enjoy the most is the asset-based long-term care product that we introduced back in 1999. It's actually the first ever asset-based long-term care product. So that we'll spend the majority of our time on that, and then we'll just briefly highlight our FIA flagship and then our strong MIGA rates. So with that, I will just jump right into it. So like I mentioned, Annuity, this is our original annuity-based LTC product, and it was offered exclusively by Guarantee Income Life, specifically designed and geared towards producers who wrote annuities as well as LTC. And they needed something that would be a hybrid between those two. They didn't enjoy writing both products when they thought they could be combined into one. And it also was actually the first product ever designed for asset-based long-term care to offer qualified assets to be able to be funding these policies. We're still the only carrier in the industry where your clients are able to contribute utilizing qualified money, IRAs, 401k, or 403bs, you name it, that qualified assets can be funding this Annuity policy. So what are you achieving with an asset-based long-term care? So you're providing your client with safe and a stable investment, free from any market risk. It is on a fixed annuity chassis, so there's no downside risk. There is some liquidity to it, and it comes in 3 different versions: a 5, a 7, and a 10-year surrender duration. The assets, of course, grow tax deferred as it's in an annuity contract. But the best feature of the Annuity product, and the reason you're putting your client's money in this product, is you're always going to receive 3 times the value of the accumulation value that your clients have for long-term care needs. So if your client puts in $100,000, immediately they would have $300,000 for long-term care benefits. And as their annuity grows, so will that LTC benefit. It is always 3x what the accumulation value is. Now, if your clients don't ever use LTC benefits, that does come up from time to time, that question from your clients, they always can access their accumulation value, past the surrender period, and they can move it to another contract. And there also is interest that would accrue over time, tax deferred. So what are you achieving in purchasing an Annuity? Why would somebody want to do this? Number one, the cost of long-term care on just paying premiums has skyrocketed here in the last few years. And there really isn't another option out there. And the option that we have is leveraging your own dollars and self-insuring. And if you don't need the coverage, you can always take the accumulation value. you have control of your assets. When you're paying premiums, you don't have control, and those premiums are gone if you don't utilize the coverage. Like I mentioned, you'll always receive 3x your account value, so it's really easy to understand and explain to a client about how much care they would receive if the benefits kick on. And then if they pass away, there is accumulation value upon death. So it's a very clean and simple solution where you don't have to fall into the high cost of just general premiums paying for your own long-term care coverage. So when would you qualify to utilize that 3x benefit? And it's simple. It's just 2 out of 6 ADLs, and you just have to be diagnosed by a U.S.-based physician, not being able to perform bathing, continence, dressing, eating, toileting, or transferring. So just 2 out of 6, and then there'll be a 90-day elimination period, and then those benefits would start to kick on with a daily maximum amount. There also is the ability to start this coverage if somebody, for example, is diagnosed with Alzheimer's. If there's a severe cognitive impairment and they're still able to perform, 5 or 6 out of 6 ADLs, they still could kick on the benefit for cognitive impairment. So here are all the benefits, what it would cover. I mean, most coverages, once this kicks on, there really isn't anything that it wouldn't cover in long-term care instances. And the only thing I'd like to mention is up to 50% daily maximum for adult daycare. The rest of them, we pay up to 100%. So Alzheimer's care, nursing home, hospice services, home health care, if you need a nurse to come to your home, 100% of that will be paid up to a daily maximum. And in addition, there's no waiting period. So a lot of products, you have to wait a certain period of time for those benefits to kick on. Ours is just simply a 90-day elimination period. So as soon as you can't perform 2 out of 6 ADLs on a consecutive basis, that 90-day elimination period starts. And after that 90-day period, you're eligible for those benefits, and you do not have to wait like many other asset-based long-term care products in the industry. Another great thing I really appreciate is how easy the underwriting process is. So there's absolutely no medical, no blood work. You don't have to go visit a physician. You could simply do all the underwriting from your home. All it simply is a yes or no pre-underwriting questionnaire. There's about 15 or so yes or no questions. As they can answer no to all the questions, then they would move on to a phone cognitive interview. Essentially, it's a 20-minute interview with a licensed physician. Here is the underwriting questions I wanted to show everyone. If they can answer no to all of these questions, then they can proceed to the phone interview. And the phone interview is just a 20-minute discussion with a registered nurse. Simple memory exercises, because we do cover for Alzheimer's. We do want to check for that. But this is really the only other thing that they have to do other than the yes or no knockout questions. There's no intrusive underwriting, and I think people really appreciate that. What you'll want to do once you get through those yes or no knockout questions is you'll just want to call the center and schedule the interview for your client, and then we'll actually reach out to the client to do the interview. Here are our premium limits for the Annuity product. The minimum for non-qualified is $36,500. The minimum deposit for qualified is $50,000, and then we can allow up to $600,000 both for non-qualified and qualified assets per insured. The other question we always get is how can you have this set up as far as ownership? We allow single as well as trust owned. Unfortunately, you cannot do a joint owned Annuity care policy, obviously, because we have to go through that elimination period and qualify the individual for their ADLs. So current rate, and issue ages. So the 5 and 7 year are written seldomly, and only so if the client is above age 80. And the reason is it's a lower interest rate, and you're purchasing this product for LTC benefits, so you don't really have the anticipation of surrendering the policy, but it does have that flexibility. Most folks are utilizing our 10-year up to age 79. Current interest rate is at 3.3%, and that 3.3% will likely cover the cost of the long-term care rider. As you can see here, you'll see our annual costs. Essentially, this product is a fixed annuity with a long-term care rider, and this is the cost of the rider. That 3.3% is going to cover all the way up to age 85. So it's a really strong rate, and we actually have not adjusted our rider costs like many carriers have on their asset-based long-term care. These rider fees have maintained the same since 1999. So 24 years, we have kept the same cost for all of our clients. One of the last things I want to mention on the Annuity is it is a product that is difficult to get legislation. We're in about 36 states currently. The Northeast, we're still trying to get the Annuity product approved. Basically, anything south of North Carolina, Ohio, and west, outside of South Dakota, Minnesota, Wisconsin, Idaho, is approved. So Northeast, Upper Midwest is where we're still legislating. In a couple of those states, Minnesota, Wisconsin, California, they are actually looking to take on what Washington did with their ruling of having you have to have your own coverage. So interesting times in this marketplace, and it's good to know that you have options like the Annuity as legislation changes very rapidly. So let's just do a quick case study here. We've got a client who's got a taxable annuity, and how they're going to turn that taxable annuity into 3x their current account value and not have to pay any taxes on that gain. So what we'll do is we'll 1035 exchange their current annuity, $100,000, into a $100,000 Annuity policy, and immediately they'll get that $300,000 tax-free LTC benefit, and any LTC claims once they're paid out are tax-free. So you do the 1035 exchange from the current annuity that they've had a $50,000 gain. You'll get that $100,000 initial account value. You'll immediately have the $300,000 benefit. And then if those benefits kick on, those LTC benefits are paid out tax-free. Sometimes you might hear, I don't need this. I don't need long-term care. Or I only have qualified money. I don't want to pay taxes on it. This is a perfect solution to help clients with tax disadvantages because we can actually transfer qualified assets into the Annuity. You can eliminate RMDs, and it will minimize their tax burden to their heirs. And then you can also utilize qualified money, and you still get your 3x multiplier. Let's just do a quick example here of how we treat qualified assets. So hey, you have a age 72 client with $500,000 of qualified assets, and they typically would have an RMD of $19,531. You'll want to take a look at moving a fifth of their policy, $100,000, into the Annuity. And then what GILICO will do is we'll automatically convert $20,000 or 20% of the initial premium each year for the first 5 years of the contract. And that's done, the client does not have to do anything. And they still, throughout the length of those 5 years, have over $300,000 in LTC benefits while still capitalizing on the conversion. And last but not least, the advantage of utilizing qualified assets is obviously that's more tax efficient to pass on the beneficiary. So I will pause there. Are we taking questions now, Don? Are we going to take them all at the end?
Yeah, no, I don't see any yet. Everything you have said is pretty self-explanatory, and I think they've all kind of, I can tell by there's no questions yet that we're doing a good job, so we can move forward. Yes. Thanks.
Wonderful, wonderful. So the next highlight I want to talk about here at GILICO is our FIA product that we launched in 2019, so 20 years after AnnuityCare. And what we designed is we designed a product that was built for both growth and income. Many carriers are building separate products to meet the needs of these clients, but here at GILICO, we try to keep things simple and we try to combine the benefits. Just like the asset-based long-term care, providing protection with LTC benefits. Here we provided an FIA that's built for both growth and income. So we built it with 5 strong growth strategies. We have a bonus opportunity and extremely low cost, all in true cost, only 75 basis points, even if you're doing joint income with our guaranteed income rider. So very, very easy product. Just taking a look under the hood here, some of the advantages of the Wealth Choice. We have issue ages all the way up to age 90 on the accumulation. That's on the 5 and 7 year. There's 10% free withdrawals on the Wealth Choice on all bands, immediately starting in the first year. ROP is available after the 5th contract year. Taking a look at our current rates and what's been popular. Obviously, people are going back to the basics after the S&P dropped over 18% in 2022, looking to capitalize on gains. And with where cap rates are right now, it's hard to shy away. I mean, we got 12% cap rates on a 10-year, absolutely no fee, an opportunity to utilize a 5% fixed bucket, and that 5% fixed bucket is available on the 5, the 7, the 10, and the 10 with the bonus. That 10-year product here with the premium bonus you'll see at the bottom, that is a 5% premium bonus, and it has an optional 5% fixed rate. So what a lot of people are doing is they're putting the client in, get them immediate 5% bonus, you pair with the fixed rate. That's a guaranteed 10% return in the first year with no market risk, and then you're able to reallocate to any of our strong strategies in following years. So that's been extremely popular as people try to maneuver the potential recession that we're in. Now, in future years, you may think, oh, 5% bonus, 5% fixed rate is great, but what is GILICO's stance and what are they like on the renewals? I can confidently say and appreciate that we are perfect on our renewal history on the Wealth Choice series. And we've had over 3 years of renewals, and we have not once dropped an index crediting rate on our products. That's something we value, and we know that clients expect that these rates hold to the best they can throughout the length of the contract. Now, the way we're able to do this is we have a levelized options budget. And what that simply means is every single year, we're spending the same amount of money on call options in the first year as the 10th year. And that includes the bonus product. You may hear a lot of carriers front load their options budget to be able to offer high bonuses or high initial crediting rates. That's not us. We still offer really, really strong crediting rates. In fact, we're in the top decile all of 2022, but we have not yet once reduced a crediting rate on our indexed annuities, which is pretty remarkable that we're able to do this. And we have a marketing piece that I have on the screen here. The consistency on our renewal rates. This is something that you could share with a client during a meeting with an illustration that could really move the needle. Now that we've gone through the growth or accumulation portion of the product, let's talk a little bit about the income. So the income rider is available on the 7 and 10-year versions up to age 75, and it's only 75 basis points for a single or a joint case. You heard that right. It's only 75 basis points for an income rider, guaranteed for life, for one single annuitant or joint annuitant. So how do we calculate the income? Now, we have a really simple product. We don't have roll-ups. We don't have very confusing benefit buckets. It's simply all on the accumulation value, and it's always 10% of the client's age. So if you have a client who's turning 71, their income on the income rider will be 7.1% of that accumulation value paid out for the rest of their life. If you have a 64-year-old, that will be 6.4% paid out for the rest of their life, and so on. So just a really easy calculation that you can share with the client. In addition, the real benefit is that we do not reduce for joint income. So if you have two 62-year-olds, we're going to pay 6.2% for both of them for the rest of their life. If you have a 67-year-old husband and a 64-year-old wife, we'll just pay on the younger spouse. So it would be 6.4%. So just keeping it real easy to explain, I think goes a long way. A lot of these products out there are too complicated, and down the road, you'll get questions, and you, for example, may forget how they work. We just try to keep products designed to be easily understood so that you can move on to the next client and help the next customer. So here's what our income feature looks like. If you threw $100,000 in for two 65-year-olds with our 10-year bonus, it's going to generate nearly $6,300 per year. It's extremely high income and low rider cost. So I welcome you on your next income case, especially if it's for early income. That's where we're the strongest because we don't have roll-ups. I welcome you to reach out to myself, reach out to Don, the rest of the AIM team, share a statement, and see if GILICO can compete with the income that you're producing with other carriers and take our income challenge. I do like to send out gift cards, thank yous, GILICO swag. Even if we don't win, we appreciate the opportunity to try to help these folks. And now with the Super Bowl coming up, I'm confident that we'll be able to compete with anybody. So send us your statements and we'll be happy to help. So the three things I would remember from the presentation today about the wealth choice and some of the niches that we fit: issue age up to 90 on the 5 and the 7 year, up to 80 on the 10-year product, and 75 for the income rider. We're very strong in early income, so years 1 to 4, and then we have our consistent performance with high new money rates and also 100% renewal history with the product. Early joint income, short-term accumulation. And then the last thing I'll mention is that we're seeing quite a bit of business is we're seeing a lot of replacement business. A lot of carriers have dropped renewal rates, and you have clients with 3, 4, 5% surrender charges. Bring that over here, utilize the bonus product, make up that surrender, give them a cap at 10.75% or a 5% fixed rate in the first year, and get them into a better situation with higher interest rates that we're seeing. So a really good opportunity there. And the last thing I'll touch on here is we're committed to the MYGA business. And the reason we are is our ability to go find yield is bar none some of the best in the industry. We have a team of 45 here at Couvert, GILICO. We do 70 to 75% of our own investment management in-house, and we're able to go find yield that other carriers just simply cannot find. So in November and December, we had the top rate in 2022 on our MYGA product. We were at 5.6% on our 5-year. That came down slightly in December to 5.2, but it was the strongest rate anyone's seen in a long time. And that just shows you our ability to go find a rate for your clients. And we're going to be committed not only to the MYGA space, to the FI space, but also to the Annuity products. So with that, I will leave my contact information up here on the screen along with our number for our sales desk. And I will open it up for questions. I really appreciate the time this morning.
Definitely, Nate. This has been a great webinar. There was a question from one that, if someone puts in 100,000 and they use 65,000 for long-term care in the second year and then dies, what happens to the remaining 35,000? So that basically, just kind of explain that. I know the answer, but I'll let you kind of put that into words.
Yeah, I'm glad you asked. And that's another benefit of the long-term care asset-based product is that once you do pass away, there is still an accumulation value upon death. So any accumulation value that's left would be passed on to heirs. Whereas, if you're just writing traditional long-term care, once you pass, there's nothing left. So that is a huge benefit.
Correct. Yeah. Just having to being able to have that. And that's so it's, like you said, it's the first part. If they don't go through it, the whole thing before their long-term care rider kicks in, basically, they'll get whatever left back to their beneficiary, less the claims. Yeah, that's a great feature. I like that. It's not use it or lose it, but there's a fit for everything we do, here at AIM with all the, carriers we use. But there's features with GILICO that I really like. I do like the Annuity and how it is put together, being qualified money that you can walk through that. With that being said, a little more housekeeping and compliance stuff. If you guys are interested in doing GILICO, make sure that we have the contracting in place. We really need to have that in order to be compliant and giving quotes and everything. We want to make sure we're doing the right thing and making sure we're in order. So get your contracting in, that's for sure. If you don't have it, we'll reach out to you. I don't see any other questions, but just saying that, thank you everybody for being on. Nate, very much appreciate you coming on and doing this webinar for us. Always very appreciative of it. So with that being said, thank everyone for their time today.
Yeah, thanks all. Have a great day.